Good evening, everyone. Can you guys hear me? Can you guys see my screen? Can you guys hear me? Can you guys see my screen? What do you mean you can't? Can you hear me? Can you see? Okay. All right. Yeah, good. So this is actually the class that sums everything up. Now there is something that people still need to get a hang of. That is knowing the directional bias of the market before you start looking out for trades, before you start looking out for your structure shifts and your inducement. You first need to understand the direction that the market is going to. Don't just come out and start looking for a random structure shift, and understanding where market is heading to will give you a better. I started again. I'm coming. Let me turn off this thing because I don't know why. Yeah, those kind of things. Time where they give you now access to this annotation tool, you abuse it. Can you guys hear me? Can you guys see my screen? Can you guys hear me? Okay. So like I was saying, understanding person that drew this stuff on the screen, please clear it. I don't know why you make use of this annotation to why you drawing on the screen. So understanding the directional bias of the market, probably for the week, for the year, for the day, is very, very important. It allows you know the direction you're going to be trading in, and then you avoid every mini structure sheet you see or every other block you see because you already know where market is going to. And if you will now not be taking trades like that opposites where the direction of the market. So how do we do that? We do that by making use of higher time frames. Now, for example, we already know that there are things that move the market. For example, if price comes to a resistance level, it's more likely that price will sell a bit or react a bit. And then the higher the time frame, the more reaction you will get. You understand? The higher the time frame, the more reaction you will get in the market. So, for example, now if price comes to a resistance level on 5 minutes time frame, you probably get a small reaction before you probably maybe react reverse. If it comes to 1 hour time frame, you get a higher reaction before you may react, you may reverse if it has to reverse. If it comes to a daily resistance, you will get a higher reaction too. So the higher the time frame, the longer the reaction will be. So that higher time frame now is what we need to get the directional bias of the market, probably for the week or until market starts changing trend. So how do we do this now? I will use what happened on GBP JPY, for example, and I will tell you guys why I was just taking buys throughout on GBP JPYs until directional bias of the market changed to sell. So now, for example, now on GJ, and like I said, there are things that fuel the market. For example, now you know that price comes to support, it bounces off support normally. If price comes to resistance, it sells from resistance normally. If price comes to another block, it buys. You understand? If price comes to a breaker block, it also buys. So on higher time frames, what I'm going to be paying attention to on higher time frames is to see where price is currently reacting from and where price is currently what heading to. I do this by marking out like vital zones in the market. You can call it for example, now before price, when price was buying, I marked out that one where price was buying from was from this other block down here. So because of that, throughout my time on GJ, the only thing I was doing on GJ was buying. That was why you saw me buy here. You saw me also buy here. You saw me also buy here. Why? Because I checked on the 4 hours time frame, and the zone that market is reacting from is from this other block up down here. That was why I marked the other block out, and I knew that that is where market is what currently reacting from, and that is the bullish order block. And the bullish order block entails that market is going to push up. Now, the higher the time frame, the more the reaction will be. So because I knew that on the 4 hours time frame, market was currently reacting from where the 4 hours order block here. What I was looking out for was what buys. So all these mini sales and pullback, I was not paying attention to it because I knew the directional bias until price gets to another reversal zone is what? Is buys. That is it. So if you look on the 4 hours time frame and you got another block here that's supposed to buy market up, it's best for you to be looking for buys in the market rather than taking other block sales again. So now pay attention. The people that will now trade a sell from this other block, what will market do? You take them out. You understand? Because why? Market is not selling down to anywhere. Price is currently bullish on the higher time frame. So what's the point of selling it? The only thing you should not be looking for, because the directional bias of the market is what is bullish, is currently reacting from a 4 hours time frame. What you need to be looking out for is once you go out on your lower time frames, that's when you now start looking out for what? Market stretching to the upside, seeing your inducement, and then seeing another block to take your trade. That was why I kept taking buys, buys, buys. I was taking those buys in line with the current higher time frame trend because I knew that market was currently buying off of this 4 hours order block. So I knew what I was supposed to be looking out for was what? Was buys. That was why. So on the 4 hours time frame, if I see that price, for example, now if I met price somewhere here, let's say I opened up my chart and I met price somewhere here, I knew that market is reacting from this what? This 4 hours order block that's supposed to be pushing market up. So if I wake up in a day and price is here, for example, I know that what I have in my mind is I'm going to be looking for buys because on the higher time frames, on the 4 hours time frame, market is currently reacting from a what? A bullish order block. That's what I do if I open up my charts. I open up my charts, I go to 4 hours time frame, and be like, okay, where is the market currently reacting from? If market is reacting from an order block on the upside that price is supposed to sell from, I will be looking for sales. Now, because I opened up my chart and price was reacting from a what? A bullish order block on the 4 hours time frame. What I will now do is when I now go down to lower time frames, for example, like 15 minutes, 30 minutes, or whatever, what I'll be looking for is now buys. So if, for example, now I opened up my charts and price was reacting from that 4 hours time frame on the downside here, what I will now start doing is what? Start looking for my buys. That was why this trade, I saw this break of structure to the upside. I saw this inducement. I took buy from here. After price did the whole thing, I came back again. I saw this structure shift to the upside. I saw my inducement. I saw what? A breaker here. I took another buy. After that, I came here. I saw another what? Structure shift to the upside. I saw inducement. This is another block on 30 minutes. I kept what? I kept taking buys because I knew that the direction of the market on the higher time frame is giving me what? Buys. So now that you've marked out where market is, what you now need to mark out is where market is what? Heading. So since I marked out that market is coming from what? A 4 hours order block, I will now start looking for zones in the market that can cause possible reversals. That is where market is what? Heading to. So what I marked out quickly on the market was what? This resistance zone on where? On the 4 hours time frame. So I knew that okay, throughout the time in this market, what I'm going to be doing is buying and buying and buying until price can get to this zone where I can be expecting what? Possible reversals from. So it means that the directional bias of the market on the 4 hours time frame saved me from taking unnecessary losses by taking sales at other block I see here. So because I already understand the directional bias of the market on the 4 hours time frame, 2 hours time frame, even daily time frame, the higher the time frame, the more efficient the zone is, and the more move the zone will cause. So because I already know the higher time frame convictions that market was buying, that is where market is coming from. So it's two type of things. Where is market coming from? Where is market going to? So on this 4 hours time frame, market is coming from a what? A 4 hours order block that is supposed to push market to the upside. Now, there comes the question: is where is market heading to first? And now we did what? I marked out this 4 hours order block. This 4 hours was resistance. What you can use order blocks, you can use breaker blocks, you can use support zones, you can use resistance zones. Those are things that actually causes reactions in the market. You understand? It's not just by opening and start looking for every structure sheet, every inducement or other block or breaker block. You have to know the trade you are taking, is it in line with what higher time frame is saying? So as on the 4 hours time frame, this trade was buying from this 4 hours order block. It means what I'm going to be looking out for is buys, buys, buys until price eventually gets to a zone that I'm expecting it to what reverse from. So as I have my trade for buys, I'll keep buying and buying. That was why I took this buy on GJ, buy on GJ, buy on GJ. And for people, this the last buy was this trade. It was the last buy here. This trade, CTP. So I knew what to be looking out for was what buys. Because that was what market was doing on the what on the higher time frame. It means that market is currently reacting from an order block that's supposed to push price up. So I'll keep buying. Then I'll say, okay, where is market heading to? Where are zones in the market where there can be possible reactions on the higher time frame? Because the same way market will go to a resistance level on 1 minute and just do small reaction. If it will pump up again, it will just do that small reaction before it pushes up. The same way it will go to 15 minutes, the reaction will be more than the one of the 1 minute. The same way it will go to 30 minutes, the 30 minutes reaction will be more than the 15 minutes own. Same way it will go to 1 hour, the 1 hour reaction will be more than the 30 minutes own. Same way we go to 4 hours, the 4 hours reaction will be more than the 1 hour on. So the higher the time frame, the more the reaction will occur. So now, because I already have a zone on the 4 hours, which is a resistance level here, I know the market will possibly make some kind of reactions to it. It's not just by taking any random trade, it's having the logic behind that trade. What's the reason why you took this trade? It's not just by having a strategy. Are you in line with what market is saying, the direction of the market? So because on the 4 hours time frame, what do I have here? A resistance zone that market can possibly cause a reversal from. That is why if price eventually gets there, I will not be looking for buys. What I will not be looking for is market to give me my strategy so I can possibly see if I can join with the sell on that zone because I'm expecting market to what to cause a reaction there. That is the logic behind trades. So now, because I have a zone on the 4 hours time frame that market can possibly cause a reversal from, once price hits that zone, I'm not going to enter any trade. What I will now do is what? Probably go down to lower time frames. That's where you now come down to what? Either 45 minutes time frame, 30 minutes time frame, 15 minutes time frame. So what did I do? Once I came down to that time frame after price already hit the 4 hours resistance level, what would I now start looking out for? I will now start looking out for my what? My strategy. The strategy is what? Market structure, liquidity, point of interest. Market structure, there are two things I look out for there. Market structure shift or what break of structure. So I will now start saying, okay, did anything like break of structure occur here or market structure shift? If you pay attention here, you can see price initially on an uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, then what? Lower low. So now we've already confirmed the structure part of our strategy. Now, with a directional bias in mind, the directional bias we have in mind is what? Is sell. It means that you should stop looking for buys at this moment because price is at a zone in the market where it can cause possible reactions from. So most people now will not start looking, oh, there's a zone here, there's a breaker here, I want to take a buy here. Disregarding higher time frame convictions. So I already know that market has bought enough and is currently reacting from a what? A resistance level. The only way I will not be looking for sales on this resistance level is if price breaks past it. But because price came here and actually started reacting from there, giving me my strategy that I'm supposed to use to take a sell, I will not be looking for buys again. I'll start looking for what? For sales. So we trade market structure, point of interest. The market structure part of the strategy is either we see market structure shift or we see break of structure. So because we see market structure shifts here, we've confirmed one part of the strategy, which is what the structure part of it. After that, you will look for what your liquidity part of the strategy for picking entries, which is what which is your inducement. So the inducement is the first pullback that market makes after the structure shift or a break of structure. So because of that, this is where our inducement is. Now the third one is what? Your POI. Now I advise you if one picking POIs, try to check higher time frames first to understand where to place your stop losses for your POI. So this is our inducement. There's a breaker here, there's an order block here. There's a breaker here, there's an order block here. But because of the rules of picking the strategy, one says you need to have a structure shift or break of structure. We have that. Second says you need to have liquidity protecting it. We have this inducement. Third says it needs to be unmitigated. The breaker is unmitigated. The other block is unmitigated. The fourth rule says pick the point of interest that is what closest to liquidity. Which point of interest is closest to liquidity here is this breaker here. So that is why if you're now with a bias in mind, knowing that market on the higher time frame is now reacting from a zone where it can cause possible reactions. You don't enter once price hits there. You wait to now see if you can get a market structure shift or break of structure to the downside to know if you can see what inducements and then a valid point of interest. So you can now what take a trade from this breaker block with our stop loss just above the breaker. Take the trade here, and then you can what target till this next inducement level here. This is a clean 1:8 risk to reward ratio trade. If you risk $100, they would have made $800. If you risked 1,000, you would have made 8,000. So it's simple. So most people now, what most people start doing, most people will now start buying from where this breakup block. Then they will hit stop loss. And they'll be like, they have break of structure, they have inducement. How did they see hit stop loss on this trade? They will now classify the strategy that it does not work. But now that you have knowledge of this, knowing where price is currently coming from, you will know that, okay, on the higher time frame, this trade already hit a resistance level. And after it hit that resistance level, it still now gave me confirmations that, okay, this market is going to become bearish because after it hit that zone, I waited for confirmations that is structure shift, inducement, and I saw a POI to take a sell. The target for this trade, either you target this inducement level or you still target towards this other block level down here. So if knowing higher time frame convictions, it is very crucial. Mind you, how I did not take any sales here until price got to that zone that I suspected it can cause possible reactions from. Mind you, how I was only taking buys because I was in line with the current direction of the market. That is 4 hours order block. But when I saw another 4 hours resistance level, I suspected the price can actually cause a reaction from this zone. So because of that, as price hit my TP for that my buy, I was not looking for buys again. I am marked out that zone with that's why people ask me what's my horizontal. My horizontal line are zones in the market where market can cause possible reactions from. That is it. So if I mark out that horizontal line, I'll wait to see if I will get reactions from there. The reactions I'm waiting for is now the strategy that I taught you guys. The structure shift or break of structure, your inducement, and your POI. That is the reaction I'm waiting to see there. I don't just jump in because you can jump in and get taken out. It's only when price comes to that zone that I'm expecting price to sell or buy from, I will now start looking if I can see a structure shift to the downside if I'm looking for sales. If I see it, I will wait and see inducement. Then I will wait for price to pull back into my POI. That's when I can now take that trade. So I'll be taking the trade. That's the only thing I'll be looking out for is that particular trade until on the higher time frame again, price hits a zone where market can also make another possible reaction. Because pay attention now on the 45 minutes, if price came to this resistance level, what does it do? It pushes down. It will come to support, push up. It will come to resistance, it will push down. So these reactions now happens on the 45 minutes. On the 1 minute time frame, it will also be there. But the lower the time frame, the less effective the move is going to be. It can happen just for a short while, and then it will still break. So this one now that happened on the 4 hours time frame, it will give you a significant peak movement before it can start reversing back again. By then, you would have caught a good amount of peak. This is 187 pips movement. So understanding the direction of the market, where is price coming from, is crucial, and understanding where market is going to also crucial. So knowing this, that's why I say this class is not for beginners because you need to know the basics of technical analysis, like candlestick patterns, knowing your support zones, knowing your resistance zones, knowing an order block zone, your breaker block. These things play crucial parts on higher time frames. That's the one I look out for. Is once I look at my 4 hours time frame, I'll be like, where is price coming from? That's the only thing. Where exactly is price coming from? If I see where price is coming from, I'll say, okay, no problem. Where is price going to? The same way that you take your trade and you have your TP level. Now, for example, you take a trade of 15 minutes time frame and you know where your TP level is, you know price is going there. Because it's 15 minutes, price will hit that TP very fast. Same way now, if I open up my chart on 4 hours, I'll be like, okay, I've taken this trade. Where is price going to? On 4 hours time frame, is buying. it means I will keep buying and buying until price gets to another zone on that 4 hours time frame where I can be looking for possible reversals. So the strategy works perfectly if we are in line with the current trend of the market. If we're in line with the current direction of the market, people that we're looking for buys here will be taken out. They will say it does not work for them. So understanding higher time frame bias is very, very crucial. So, and now people that were taking sales, maybe taking sales from this OB, they'll be taking out, taking sell here, taking out. People that will take sell here will be taking, understand? Because they don't understand where market is heading to. I will only be looking for trades that opposes my current bias if on the higher time frame, market gives me my trading strategy for reversal. So if I'm looking for sell on this 4 hours time frame here that I mark this resistance level, I'll be expecting price to come to that level and give me a market structure shift to the downside, give me my inducement, and then tap into my POI before I can take that sell. And if I'm looking for buys on the support level down there or the other block down there, I will not enter immediately price hits there. I'll wait for price to hit there, give me a break of structure to the upside or structure shift to the upside. So I will not take a trade with another block. That was what I did here. This is the 4 hours other block. Price hits here. Not after he broke the structure here and came back to this other block, and I started buying. And I bought again. But here. Why? Because I knew the direction of the market was bullish because it was writing from a 4 hours time frame. It came to the 4 hours time frame and then gave me the strategy that I need to trade with. That's why I kept taking buys and buys. Now, why I took sell here is market now came to what the resistance level. I did not enter immediately got there. I waited for price to give me the strategy that I trade that will confirm yes, this is going to sell from this zone. So I waited. I got my structure shift. I got my inducement, and I now got my what? My breaker block. That was why I now took sell from this zone. So the knowledge of candlestick patterns, the knowledge of all these basic things you need to. That's why I don't call my strategy pure SNC because I use logic to approach my trade setups. The logic of it is being knowing where. That's why I can hold a trade for so long. You keep asking me why I know why I'm holding it because I know where market is coming from and I know where market is going to. That's why most of the time, since I'm taking only buys. But things that I catch when market is buying and I will keep buying until it goes to a zone where I will start selling. So understanding that higher time frame bias is crucial. As well, like the thing I taught you guys here, I gave you guys a lot of knowledge, like a lot of things. I didn't just come out to teach you a strategy. I gave you the logic behind why market does some kind of things that market does. I didn't hold anything back in what I taught. I taught everything concerning what I look out for to trade. It not pass like this. Like there's literally nothing more. Don't take every other block you see. Don't take every breaker block you see. Check the where market is coming from on the higher time frame. If market is buying on the higher time frame, why are you selling? Why are you looking for other blocks to take sales from? If price is buying on the 4 hours time, let's say it's buying from a support zone, it's pushing off from support and it's heading to resistance, and price has not gotten to that resistance yet, why are you taking sales from these other block candles? When you now get taken out, you blame the strategy. So is you're supposed to be taking trades in line with what the higher time frame is saying. If it's buying on the 4 hours time frame and it's going to resistance level, keep buying until price gets to that resistance level. If it's selling from if it's selling from resistance, keep selling. Even though you woke up and it has not gone to that support, look for opportunities to enter sell again. Keep doing that until price gets to where it's going to. So it's two things: where is price coming from? Where is price going to? So it's in between. It's like this: where is price coming from? The strategy you use for confirmation to jump in, then the target is where price is going to. So if you get where price is coming from, it will tell you the directional bias of the market. We now use the strategy that I taught you guys: structure shifts, inducement, or PUI, or any instant or break of structure, anyone. But make sure you're trading it in line with that what that higher time frame is seeing, what market is on the higher time frame, trading alongside it. Then when price gets to that zone that on the higher time frame that can cause possible reactions, then wait for it again to give you another confirmation with the strategy that I set out. It's as simple as that. Simple as that. There's literally nothing, like nothing more to what I do. I don't overcomplicate things. I don't overcomplicate things. It's as simple as that. I don't overcomplicate things. If you backtest what I'm saying now, open up your charts, find higher time frames. If it supports zone on the higher time frame, just look for what price was doing throughout. He was buying. And we see that what you'll be seeing more of is breakout structure to the upside or structure shift to the upside. You see your inducement and your POI. But that is what you're going to be seeing while price is currently reacting from the support zone. Then if you get to that resistance zone or the other block zone on the higher time frame, like 4 hours, use the 4 hours time frame to know where market is going to and when it's coming. Once it gets there, pay attention to what market keeps doing more. It will give you structure shift to downside or block or structure. Just keep looking for opportunities to take sales until the higher time frame again, price gets to a zone where it can still cause a little reaction again. The higher the time frame, the reaction will not seem much on the higher time frame. But on the lower time frame, there will be a lot of reaction because where market is reacting from is from the higher time frame. It's as simple as that. So backtest this thing. Go to your charts, find higher time frames, look for either resistance levels, write this down: resistance, support, other blocks, and breaker blocks. These zones, these things I just called now, are what moves market on the higher time frame. It's when you've gotten price where it's moving from on the higher time frame that you cannot go down to 15 minutes, 30 minutes, 45 minutes, 5 minutes, 3 minutes even to now get the strategy that I thought. And once you don't even need to do it every day. Once you come out for the week and see that price is buying from the 4 hours time frame, you can just use a long horizontal line to mark where it's buying from and use another long horizontal line to mark where it's going to. So if you wake up and price has not touched where it's going to, just be taking the same directional bias we had until price gets there. So if you mark it out, for example, you use this horizontal line, mark this zone, and you mark this zone. And price is what buying from the support zone now, for example. You keep buying, you buy here, eventually you understand, and you wake up the next day, price is still here. You look for opportunity again and take another buy. You wake up again or you open up another and price has not yet gotten to this zone that you're expecting it to react, like another zone on the higher time frame. You look for another opportunity again and take another buy. You keep doing that until one day price gets here. You avoid taking a trade for them. So here now on the higher time frame, let's say it's a resistance level or another block on the 4 hours time frame. What you're going to now be waiting for is for price to give you a sell confirmation. By that sell confirmation, you'll now be looking for what? Market structure, liquidity, POI. So out of the market structure, liquidity, POI, if on market structure, if you get a structure shift to the downside, you've confirmed one. If you get the inducement, you've confirmed two. You now get a valid POI, and you know what? Take a sell. You now mark out a zone that price will probably head to and react from on the 4 hours time frame. If you mark it out, you will now keep selling market until it gets to that zone. That's when you now stop selling. Simple as that. So if market is now selling and coming down to this 4 hours time, let's say for example, this is the zone we're selling it down to, and then you see another block here for a buy. There's no point taking that buy because where is the market going to? Where is the buy going to when the seller has not yet hit the zone it's supposed to react from? So, and this other block, most people will now find it on what? 10 minutes time frame, 15 minutes time frame against a 4 hours resistance level that market is selling from. Obviously, the higher time frame will win in power. So you will now keep selling it down, selling until price gets to the zone it can cause a reaction from. So this other block here, is going to take a buy, will probably just push us more and what? Fail. So it's when price gets to each zone that you've marked out on a higher time frame, you now start looking out for your strategy to form. If price is now buying from a support, you keep looking for your strategy for buys, buys, buys until a zone gets to the market for possible reversals. So that was why for this trade throughout GG, I was just buying, buying, buying. Why? Because I need the higher time frame conditions. It's as easy as that. So please, if you have any questions, you can ask. It's not and this I feel like I've explained everything. Even things that like I compiled everything and added to this particular like everything. This is not, I don't think someone like SMC has this all together in one like teaching because I combine a lot of things to just trade the way I trade. Yeah. The brand KP.
Good evening.
Good evening.
Good evening. So I have several questions, but I will go with just like three questions because others are waiting. My first question is, so far I understand what you're teaching in this class, but I've been backtesting my strategy not on forex but synthetic indices. And I have a question because I'm looking something from my backtesting. If, for example, now the market shifts and creates an inducement, and I marked out my breaker block or my other block, the one closest to the inducement, like you said, and the market went ahead. The market did not mitigate it. I went ahead to create another market
Oh,
shift.
bro, this question you're
With
asking now, we've answered this question like 3 times. Even last class, we answered the question in last class. Even the previous class, we answered the question again previous class. If market does not mitigate it and creates another inducement and breaks another, we talked about it in the last class. Even the previous class before that, Seth.
I didn't pay attention. Maybe I didn't hear it.
Well, it was in the recording. Like the recording that I sent is there. Someone asked the question, if it breaks and then it does not mitigate and breaks again, which one will you use? It was in the previous class. The recording is there in the
Okay,
group. If you watch it, you'll see it there.
okay, I will check. I will check the previous record. Is it the third recording or the second one? Because
I
I
think it's the
think there
third
are only
class.
two
But
recordings.
no, I sent 3 recordings to the class, to the group. Three.
Yeah, I missed the third one. I missed the third one. Then my second question is, if we are like you said, yeah, we follow the bias of the higher time frame. Then we try to pick our entry from the lower time frame. My question is, do you use 15 minutes for 4 hours? Do you use 45 minutes for 30 minutes? Or do you, I don't know if you understand what I'm trying to say.
I
What are the two time frames you
mentioned
use?
here, like I said, I don't think you pay attention to what I say. When I was teaching this higher time frame, I called a lot of time frames here. When I talked about the 4 hours, and I said you can go down. Do you not listen to me? I literally said it in this like this class now as I was teaching. After mentioning 4 hours, I now said you can now go down to 15 minutes, 45 minutes, 5 minutes. I mentioned it in this particular class more than once. You guys should try to
Okay, I
pay
understand.
attention more to what I say, please.
The network is breaking, so sometimes there are things you mention that we don't hear. Because I was not listening. Thank you. That's all.
Okay.
Good evening, boss.
Yeah, good evening. So
I think the first guy has asked my question, oh, but boss, I'm not sure. Because I've watched your three recordings like more than 3 times. I didn't get where you said like the particular POI um you have to use like if the market breaks structure twice.
I did. I did. I said focus on the main one that like the main structure that got broken. I did. It's in that class. Someone asked the question. I think I even drew it as a diagram. I said you focus on the place that's the main structure broke from. For example, now your higher time frame, for example, let's say on the 4 hours time frame, price triggers your 4 hours order block, and then before it triggered that 4 hours order block, it was making lower highs and lower lows. Then it does a structure shift. The place that the first structure shift occurred is what I'm going to be paying attention to. Regardless of or the other moves that comes before, I don't care. Market does not move in one direction; it moves in different directions. So the zone where the first structure broke out from is what I'm going to be paying attention to in the market.
Okay, sir. That's my question. Please, which which broker do you focus on trading view to? Because some of these brokers, the analysis are not the same, like their charts.
I use forex.com.
Okay, sir. Thank you very much. I think that's my question. Sir, sorry, please. How do you set your stop loss as well?
I talked about this thing too now in the last class. We're way past setting stop losses. The one I talked about breaker block. No, I think it's the second class when I talked about difference between breaker and other blocks. Someone asked how I placed my stop loss. I told them I showed them a video of it. Please just do go back to after I sent the last recording for the class. compile everything, watch the first one, second one, third one, and fourth one, backtest before you now, because I talked about all this. I'm pretty sure I did. Like I drew it out. I talked about it.
Okay, sir. Thank you very much. That's my question.
Good evening.
Yeah, good evening.
All right. The question I want to ask, as you said, that we should be looking. Let me say the market was going on an uptrend. That we should not trade against the trend. We should wait for before we trade against the trend. We should wait for markets to hit a particular this thing. So what if markets gets to the particular resistance level and it didn't resist from there and keep breaking to go high?
So
So should
that's
we
yeah,
should
that's
we wait?
sorry. Finish your question. Sorry.
So what I'm saying is that okay, let me say market was currently buying, and you marked out a resistance level whereby you have the probability that if you reach to that resistance level, the markets will reverse and start selling, right? Let me say market reach to that level and break that level. Does it actually mean that it's still going to go down or it's still moving up to another resistance level
If it
again?
breaks that resistance level and closes above
Yeah.
it, what I would do, okay, I already know that that resistance level has been broken. But what does that mean? It means that that's a break of structure because market maintained this current trend and still broke a key level. So I will still revert back to the strategy, but this time around using break of structure, inducement, and point of interest. Then I will continue buying instead of selling now because there was not a market structure shift, but a break of structure.
All right. All right. That was just my question. Thank you.
Yeah, Rufus.
Hi, good evening.
Good evening.
I actually using it like thank you for the class. I actually had a question before we start this class, but when we start the class, you actually answered my question. And this is my first time trading, especially. Although it always to start with live accounts, but I started with my phone account and already passed phase one. So I just wanted to use like medium to just thank you, like thank you very much. Then.
Okay, no problem, no problem. Zabi.
Okay, good evening, everyone. Good evening, Tony. So my question is, like, if the market now reverse from the resistance and get to the maybe breaker in 4 hours and did not stop selling and continue selling, will I still just wait for the market to get to other block down and then I will now look for my strategy to buy, or I should just continue the sell?
Continue the sell. You keep if it keeps breaking zones. For example, if it comes to the let's say for example a breaker or another block and then it breaks past it, the other block becomes what? It becomes a failed other block. And what does that mean? It means it's now a breaker. So you now have to find a way to wait from price comes back to that same other block that failed. You continue taking a sell again. Like the more it keeps breaking zones, you either put it to either it's a break of structure or a market structure shift. Each zone that breaks, market will use the pattern to break it. So either if it's selling and it breaks a zone, the zone it breaks happens to be a break of structure. You wait for your inducement, wait for price to come and tap into another block, then continue taking a sell down. Do you understand what I mean?
Yes. Okay. Another question. Like if I like when market come to my POI and take my order, then and I want to add more positions because this seems to do me like it did to me this week. I marked everything and it came to my POI and it hit it. Then it starts going up. At that lower time frame reversal, I added some position and the price just took me out. Then start going again.
That's not what I teach. Now that's not a technical thing. If you properly analyze zones to put your positions in, then it will not take you out. Like you just take it as if you missed an entry and you want to analyze a trade where you place a stop loss in. You have to get your analysis proper. And if you don't, you hit stop loss. So this adding position itself is a risky thing. Just because you see me do it does not mean that you should be doing it. Calculate your losses beforehand and enter your trades once. The reason I do it is because I don't really care about the money. It's nonsense to me. So if I take the trade, I'm willing to risk whatever I'm willing, and then I'm more skilled because I can learn how to analyze why trades move. Like I can analyze why the trade is the movement. But you that have barely started trading this strategy just this month, threat because this was the once you got added to the group now. You are not yet skilled enough to even finish the particular strategy on its own. Now talk more of you coming to add positions when market is already moving. It's going to be harder for you. You understand? So focus more on like trading responsibly. Get your preconceive your risk. Get the stop loss and the lot size that's applicable to that money that you deposit, to that money that you're risking. Enter your trade once and allow it to play out and hit your TP. Majority of the time, this stacking thing may go against you. There's only is experience that will give you that insight on where to add positions and then add valid pullbacks. But it's not something that's so easy to get. It's something that you have to do over time and repeatedly lose money before you can actually get it. So for now, focus on entering your positions where you're supposed to enter it and don't focus on stacking. It's not a proper way of trading. You get
Yes, thank you.
this month. This month,
Hello, bro.
yeah, what's up?
Yeah, greet you, bro. Good evening. So I want to ask you a question. On this, let's say you from the 4 hour, right? And maybe you pick a level that price is reactive from, but maybe from the other block or breaker, and price has already mitigated that breaker or other block. Can we still use that other block or breaker?
No, you can't, except you mitigated it before the market structure shift or break of structure. You still apply the same rules, though. The same rules of picking a proper point of interest still apply it to the
Oh,
higher time frames. Like you can apply it there, pick valid POIs that market can cause reversals from. The thing is that even if it's invalid, price will still give a little bit of reaction to it. It's just like you see your other block on 5 minutes time frame. It's not valid, but you pick it, price will just come there and push up, like maybe say another block for a buy and market comes there and then you buy up a bit, you notice it, give you small profit, then hit your stop loss. So that buying up a bit is because it's a lower time frame that you picked. If you pick an invalid POI on a higher time frame, price may come there and give you small reaction and then eventually hit your stop loss. But that small reaction now on the higher time frame will be a lot of pips compared to what it will be on a lower time frame. Do you understand?
okay, no problem. Thank you.
Philip.
Okay, good evening, Tony.
Yeah, good evening also.
Yeah, I just want to thank you very much. The higher time frame POI was well explained, and I just have a couple of questions. I know today might be our final class, or probably we have future class. I want to know if you trade with sections. There are specific sections you trade some pairs, like your favorite pairs.
Yeah, it's kind of because BTC actually moves around 10, if you're in Nigeria, 10 p.m. Nigerian time, 9 p.m. Nigerian time. That's when BTC is most volatile. So from that period, I will take it into the Asian session. So I trade GBP, JPY, gold, and BTC USD. And gold is GBP. GBP is London pay. Is the London currency now. GBP is pounds. So because of that, I trade pounds for that's London session. That is GBP because it's GBP. Then GBP JPY also I trade Asian session. So GBP JPY because JPY is Japanese yen. I trade the Asian session and compile it with London session for GBP. Then gold now I trade gold during the London session. Do you understand? Because it's gold USD and the USD there is what like I trade the gold
New York.
around yeah, but I don't really trade New York share. I just trade Asian session and then London session. That's usually what I trade. That's when market actually goes for the stop rate, the stop loss, the liquidity, market sweeping liquidity and all. That's when, from my experience, as I've traded before. So I just talk to it around 10 o'clock. I'm active. 10 p.m. I'm active. 12 a.m. I'm active. Till 8 o'clock. I've already seen the setup of 8, 9, 10. If it's getting to like New York session, I don't really see setups like that again. And even if I take a setup, I don't really like holding my trades till 10 p.m. at night because that's when market will experience spread hour. So I feel like if I hold a trade from 10, 12 p.m. or 1 p.m. or 2 p.m., it may not hit my TP before market closes. So my setups are majorly around 10 p.m. at night because when market closes, I start looking for setups because market is not really moving much. So I can calm down and properly analyze. If I take the analysis, I will now wait till 12 o'clock. That's when the agent session starts. I will take the agent session and trade it till London session, and I'll probably just close.
Okay, so basically, if you see a valid POI on a higher time frame being mitigated at New York section, you don't take such
I
trades.
can if I'm active. I don't really have sessions per se, but the time I'm usually mostly active to look for setups. If you pay attention to my trades, you wake up in the morning, 12 o'clock, I don't already drop TP because I'm mostly active around that period.
Okay, last one. Yeah. When marking your resistance and support level, do you make use of line charts?
Now,
Like if you're marking some key levels, like you mentioned, the support and resistance.
it's not like I mark it out all the time. What I do is just when I need to, I just mark out this. If I open up my chart, I just see, okay, where is the market coming from? I try to use anything to just draw it out. Once I've drawn it out, I already know the directional bias. I can delete it later on, and I'll check where market is heading to. Valid zones, resistance support. You can use your eyes and spot it now. If you check candlestick Bible, then that's like the beginner this thing. Just tell you zones that markets may probably have reactions from. So because it's higher the time frame, the more the reaction. So that's why you
Please,
now.
additionally, please, you mentioned the broker you use for GBP, JPY, and the rest. What about gold and BTC?
Gold is still the same thing. I use forex.com for gold, but BTC
Forex.com.
I use Coinbase.
Coinbase. Okay. Thank you very much.
Solomon. Solomon. Solomon or Choche.
Hello, and good evening, boss.
Yeah, good evening.
Yeah, so my first question is, I don't know if you pay attention to, what is it called now? News.
No. I do purely technical analysis. And
Hello.
I do purely technical analysis and for the fundamentals actually conflaces good technical. If you're correct with your technicals, you have nothing to fear about news.
Okay. So, my other question is, are you there?
I mean,
Okay, my other question is, okay, let's say if price is coming from a support level and it's heading to a resistance level, you are meant to keep buying. And then let's say it's on a 4 hour time frame, that's a higher time frame, right? What if it taps your resistance level and it starts selling? We are meant to look out for a market structure shift, then an inducement, then our point of interest that is closest to the liquidity. If we've gotten that, are we to, let's say our inducement, the closest point of interest is an order block, are we to switch down to the lower time frame, like the 15 minutes before taking the trade, or we are meant to just go into the trade from the 4 hour time frame?
like you won't see those things on the 4 hours time. If price hits your higher time frame zone on the 4 hours time frame, you automatically switch to lower time frames and start waiting for the structure. You're not going to see the structure shift on the 4 hours time frame. The 4 hours time frame will even give you the entire move. Before you wait for structure shift on the 4 hours time frame, if you don't hit TP on 15 minutes time frame. So on the 15 minutes time frame or 30 minutes time frame, that or 5 minutes or 10 minutes, that is where you start looking at for your structure shifts, your inducement and your valid POI on that lower time frame. That's the lower time frame that you get your order block or your valid point of interest from. You take your trade.
Okay, thank you very much. So what if the let's say the price gets to your resistance zone, and we now, I don't know, we now see a market structure shift. What is the best time frame to use? Like, is it 15 minutes? Like, from your own point of view, what's the best time
No,
frame to use?
no, for me. As long I just check the one that market shows me the direction clearly. If on 15 minutes I see the structure shift clearly or better, I'll use it. Anyone structure shift on 5 minutes time
Okay,
is the same as structure shift on 15 minutes. It's the same as structure shift on 30 minutes. Just that the candles
okay,
may be larger. But the same thing.
okay. Let's say the market structure shift happens on a 5 minutes time frame. Are we to still take that trade on a 5 minutes time frame?
What do you mean still take the trade on the 5 minutes time frame? Your POI is your POI everywhere. If your 5 minutes time frame structure shift happens, it's going to still be a structure shift on the 15 minutes time frame. Just go to lower time frame and find the
Okay.
structure shift.
Okay, the reason why I said so is because sometimes to get a point of interest, it will not, let me see your order block, it will not be that clear. Sometimes the candlestick there will be like very tiny, sometimes it will be very large, which will um which will make your risk to be higher. That's why I asked that question.
Just stick to your time frame. There was nothing that made the risk higher on this particular trade I took now. This trade I took here, I just got my breaker here and kept my stop loss. The risk was just 20. TP was 100 and something pips. 1:8. Stop complicating things and just back test first. For you, don't complicate things. It's easy. It's not like, but it's nothing to complicate. If you don't see your point of interest on 5 minutes, go to 15 minutes. There are multiple time frames for a reason. But you already know that now you're looking at lower time frames. So you can look at 15, you can look at 30, you can look at 45. It does not take time to switch time frames.
Okay. All right, that's my question. Thank you very much.
Zoom user. Well, it's 9 o'clock. Oh. Please do fast with your question now. Zoom user. You guys are no longer asking me questions. I don't understand the questions for asking me now. Zoom user. Wilson. Wilson.
Um, Good evening, Tony. Oh, good evening, everyone. I just have a very simple question. Um, what I want to ask here is when I have maybe a market structure shift or a break of structure, and I have my inducements, but that inducement now mitigated the maybe the weak of the breaker, but it hasn't touched the body of the demand or supply candle there. So let's continue consider that a valid breaker, or I should use any other block below the breaker.
For breaker mitigation, it has to mitigate the body of the breaker.
Okay, even if the inducement it touches the wick, it's still valid.
Yeah.
Oh, okay, thank you. Thank you. That's all.
Hello, Joseph.
Good, good, good evening.
Good evening.
Yeah, the question I had was about the other block placement on the other block candle. You know, when like for example for bears for demand zone, you said when you were teaching I think the second class, you said if the candle wick is larger than the body, we should use the body of the candle and leave the top wick and enter from there, at least to reduce the drawdown or so that your stop loss will be a little bit tighter, to not be that large. But if the candlestick body is full with less wick, we should just use the whole candle as the other block. Now, for bears, what if the wick is below, like the wick is under and is long under, not on top? You will like place, let's say place it
Does
on
not
top of
matter.
the.
Does not matter. Does not matter. They're not looking at the week down there. I think on the GJ that I took here, I had week under here. I was not paying attention to it. There's no point to it. The week on the upside. I was
Okay.
looking.
Okay. Thank you.
Right. Nelson.
My boss, my boss, my boss, my boss, my boss. Good evening, my boss. Good evening, bro. How you
Good
doing?
evening. Dodi, what's up?
I just did right. I actually not get question, Shao, but I just want to appreciate you from the bottomless part of my heart. You really, 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 really did a lot for me and my family. You might not see this class you are doing as anything, but it really changed my life. And I'm grateful. I will always be. I just want to take this time. I know it's not like it's not enough. If I really want to show you my appreciation, it's not enough. But I just wanted to know that this changed my life, and I am very grateful. Thank you very much, bro. And God will continue to bless you. Thank you very much. I really appreciate my family. Everyone around me appreciate because they all benefit from it. And I'm very, very grateful. Thank you very much. Thank you.
Welcome. Welcome. Welcome.
Who be God? Who's in the words?
Okay. Alarm. Please, my head on the screen. Please ask valid questions. Alarms, you don't want to eat. Jesus Christ.
Hello.
Yeah, hello.
Hey, can you hear me?
Yeah.
Yeah, hello. Good evening. So the question I have is very short. You said if we mark our direction from the higher time frame. So what the question I want to ask is that so if it hits the resistance zone or the support zone you mark on your higher time frame and it's just like a little push. If when it's making that little push, if it's showing like if it's still showing like the direction to the upside, will you go with it or you wait till it actually breaks the resistance or support that it's made that first push?
What is which? See, the whole higher time frame is just for you to have an idea of where reactions may come. But you still have to wait for the strategy to form around that zone. So if it's going to break it, you have to wait for the strategy to form. After it breaks it, you wait for inducement before you finally enter. Just don't jump in for the strategy to form.
All right, thank you.
Women's iPhone. I will take just now then I have to rest my head. I've thought for 1 hour. All the time gone past. Women's iPhone.
Good,
Women's iPhone. Good evening.
yeah, good evening, brother.
Good evening.
Yeah, there's this little question that I wanted to ask. I've asked you this question before now, your DM, but you didn't take it. I think maybe because you are too busy or something.
What's the
You
question?
know, before I joined, I actually told you that it was crypto that I focused on. I'm not reading forex, but you said it's all the same. So looking at this chart now,
Uh-huh.
this place ETA read this thing identify. You analyze that place. You also analyze the one that comes up, and also the one that you took the sell. So my question is this: when analyzing the chart, do I need to like go back? I know I'm going to look at my left hand side before taking the right. Is it like this analysis that you did here now? Is it necessary?
Higher time frame analysis.
No, not about the time, not about the time frame. I'm talking about the analysis that you did here, like the chart that you analyzed here. I'm talking about the buys you took here. I'm talking about the buy that you took up there as well before the sell. Like I've noticed that before you actually analyze your chart, like you have series of analysis before getting to the point that you are taking.
That's just me taking trades now. She make I no trade
Okay.
again.
No, that like I wanted to understand. Is it the stacking? Because in crypto, like we know the like I don't know, but I'm just saying though.
That's
I just
just me.
wanted to like
That's just me taking this. The trade I took. This is another day. This is another day.
okay,
That's just my.
okay. I for no that because it called they confuse me, sir. So that's why I wanted to like clarify myself on that. Thank you very much. I didn't join the class on time, so I will not ask much questions till I watch the video. Then I'll come to your DM. Then
You FX.
Good evening, sir.
Good evening, sir.
The thing is, what I wanted to ask, is this your second buy that you take? Like, I just wanted to just like simplify it for me because it's kind of confusing.
This one.
Like, this one, that place you mark direct something.
This one.
Yeah.
No big gadus be this. No big gadus. No big gadus. I don't
Can
ask
you
you
hear
so
me?
what I ask
Who they
now. I
make
don't dey
noise?
free. So we are good. Off my this thing.
You guys are almost be,
Can you hear me?
yeah, but na for your background they make that noise.
Hello?
They don't show for budget.
Na for your background they make the noise.
Say hot dog na bad thing for don't show for that budget.
Hello?
Na for your background they make that noise. Um, you guys are disrespecting me. No nice. But the trade is basically this is simple. I don't know. It's not come on, how can they? This is lower highs, lower lows, lower highs, lower lows. Then structure shift to the upside. Inducement. The inducement never mitigated this breaker body. So I took my buy from this breaker. That is it. Is simple as that. Please, I have you. You are now asking me valid questions again. And if I continue this now, I'll never end this class. It's already 9 something. That's more than 1 hour. Any other question you have, please come to my PM. I've already tried for today. You guys should please back test. I will send the video when it's done processing. So you guys can get a better understanding and have something to back test with. Nobody be asking me questions again.